Welcome to TradeTheMBI.com. This is John's reports for the ninth, and well, it was a pretty decent day as far as holding on to what was very bullish readings and not being able to do much with it. We just pretty much hit the 70s, well, 61% Fibonacci line right here, and came back up off of it. We're starting to see a potential pretty decent drop off here of Magenta. Of course, that's the start of the day. This a little too early, but if that shakeout continues to roll over, that would be a little bit of a weak spot. And there was that short-term buyers just fading off. And so what they did was they did a little front running of the end of the buyback period, and now that's open, and you get to sell into all that new money coming into the situation. Secondarily, it was interesting. We did get some reports on oil builds with vis-a-vis gasoline in that, which indicates that if you're getting the kind of surplus that they're seeing, and it's interesting because the government reports are a little bit varied from what we're seeing from practical aspects. What a surprise. Uh, it indicates that there's not as much demand, and that's something we always look at when it comes to economic health overall, and whether or not this inflation situation is starting to really creep through and work its way into economic slowdown. So obviously, it's going to take another couple more months to see how that plays through. But it's the early, the equivalent of the canary in the coal mine, so to speak. So from an NQ standpoint, you can see also still strong, but if this follows through, we're going to have a pretty decent pullback from that magenta spike there, and it's definitely going to be up to those midterm, long-term buyers to start picking up the pace here. Could even see a potential move back towards that 50% before making another run. But again, it's pretty straightforward at this point with the rising MBI white. Crossover there would suggest that 61% will not hold if it's breached. So becomes fairly straightforward. The exuberance that the Fed was going to cut rates into infinity and be at zero, negative, whatever, not exactly matching reality. And again, but as long as they keep these at artificially low rates, again, it forces appreciation within the market, but it's also a double-edged sword because it cuts into economic growth. And again, also the spending is just not sustainable. And oil making a strong comeback there. The tensions throughout the world are going to continue to be a focus point. And again, all we are is back to where we were the beginning of February. So no real help. And even those numbers that came through at the beginning of the year were horrible for the CPI readings. After this spike that went up, it's only going to be worse. So it's not getting better, and it's not going to help for re-election for that side that wants to claim that things are wonderful and that you should ignore the fact. And it's a good tactic, I think, because you just tell everyone that no, everything's great and you're the only one really having a problem, and it's just you. It's not the fact that everybody is having an equally difficult time with the rising cost of everything. From a euro standpoint, again, that's as oil goes, so goes the euro. It's pretty straightforward at this particular case because the growth in the eurozone, while they're touting it as being spectacular, is barely tenths of a percentage over zero. So you take out the government stimulus part of it, and it's the same with the U.S. You got problems. When we look at it from a gold standpoint, again, I think that's going to just keep adding continued upside pressure to it. But currently, looking okay, but you've got that MBI white lead, which is probably going to mute any kind of push with that magenta lead at this particular stage. Crypto also holding on steady here after the halving for Bitcoin. And again, this is going to be a question of would you rather be in equities or crypto at this particular stage? I think that a lot of people are saying, oh, I'd rather be in equities at this particular point. But I think that's going to start to shift, particularly if you start to see added slowdown. And again, this gets into a question of, how reliable are some of the numbers that are starting to come out of the government. We see this constant revision thing after the fact. They post a good number and then revise it later on. You're getting to points now where it's going to be hard to continue to hide if it's true. Of course, I mean, if they're close enough, then it's not a big deal. But if you start to see big disparities, which we are seeing between some of the private readings versus what is publicly announced, and even when we talk about going state by state, the variations are pretty extreme. From an ETH standpoint, also much worse than Bitcoin, at least from a strict situation, and that's due in part to its complications from a legal front. And when we look at our 50K, so after that sell, we ended up with a little bit of a fade back. We held on pretty decent, especially with the rising zero in that. And MBI white lead says pretty strong MBI white lead, and that will not hold support if it continues to see deterioration here with the magenta. So we had a pretty decent DOC spread. And, it's one of these where I look at it as a precursor reading. Whenever I see a gap range between the actual histo and the shakeout magenta, if it's over 10 points, it's usually an indication you're getting ready for some kind of fade off. And it doesn't usually happen right away, but within, 5-6 bars, it usually does. In this particular case, you can see where that drain started right over here, led to that move, and you can just go back and follow it. It's fairly clean from that standpoint, even here where the big discrepancy between, and if we look at the numbers right there, so the magenta to the actual histo reading, just under 10 in that particular case, and then moved well over it there. So, worth noting. But I think that as we see this, we've got positive extremes going all the way back to the 51.68 range, which would be modest, normal kind of retrace. From an intraday standpoint, we had the early morning where it was just starting to fade, and then as soon as pre-market opened, skyrocket right back up. So, just flipping around with those option setups, and then that faded back in to fill its positive extremes, which took it all the way right back to here, conveniently spot on, and back and forth from there. So right now, a little softness here in the post-market. The wee hours European session has begun. So that's the long and the short of it. Again, I think that we're now going to start moving towards more of a past hype situation, because I think that they realize that the Fed talking about stuff that isn't doing anything, then it's just job loading at this particular stage. They're going to start looking at real economic numbers, and if they're not particularly healthy, as we're seeing a lot of lower revisions and expectations from a lot of the reports from CEOs, it's a problem. So we'll just keep following the readings as they come. As always, though, anything relevant, I'll put it on the Skype chat for you. Have a good one. Trade well.